Hi guys, welcome to today's session. I'm going to give everybody a moment to join and then we're going to jump straight into things. Bit of a busy afternoon, bit of a volatile hour. So we'll kind of go over that before we jump into a Darwin review. I'm going to give everybody a moment to join, just check my links are being sent out correctly. Perfect, looks good. Welcome guys, welcome. Hello, beautiful candle. Canny Sloopies, hey handsome before Tal gets here. He'll be here. He's always lurking. He's always lurking in the background. Yeah, I mean, what an hour. I was saying to Blaine before we jumped on this stream, just like I think I need to start manual trading because I've been making some fantastic calls over the past couple of weeks on these sessions. You know, we called the Bitcoin short at this level a couple of weeks ago. And then for the guys who were on the session yesterday, you'll remember I was talking about how, to me, this looked like a bit of an exhaustion, similar to what you see in indices and crypto as well, is when you have like just this absolute monster rally. When we're looking at the size, like the ATR of the candles over the past like 3 or 4 days, I think it was yesterday I was saying this, maybe on Tuesday. The past like 3 or 4 days have been the biggest days pretty much out of the whole couple of years that it's been rallying. And that's usually for me, you know, a pretty big sign of exhaustion. And I was saying this and I was like, you know, it's one of those things I wouldn't like to bet against metals at the minute just because I don't have enough conviction in that, but it just looked very, very, very heavy. I ended up taking the dog out for a walk in the last hour. I come back to this. So who knows, maybe like, I think realistically, before this is kind of normal. I did say yesterday, you know, this kind of area is really where that decision needs to be made. I mean, we're looking at silver right now. Like before I'd have any real conviction, to be short is beneath 100 pretty much. But like I say, I don't trade it. I'm not looking to trade it. This is just my observations as an analyst. And, you know, I've been doing this for many, many years, but I am not clicking the button at the end of the day anymore. You know, I have my portfolio that does that for me. So all of these are just empty words. Don't take it as financial advice because it is absolutely not that. Yeah, craziest 1 hour candle you've ever seen. I mean, it's pretty wild. Silver, I think it was down 8% from open to low. Oh, 10.6% on silver. Wow. I wasn't looking when it was that far. Gold, which is gold, 7.26. Obviously, Bitcoin's heavy, down 5% on the day. Again, we covered Bitcoin quite a bit over the past couple of weeks about this range. You guys will remember last week or a couple of weeks ago, I said this is kind of the level that you'd need to break through before we're looking to potentially push higher. Failed, sold off since then, and then kind of this area here is where I'm looking at, you know, it's kind of a bit of a battle here because we're mid-range, and to be honest, it looks a little bit heavy. I'd be expecting it to come back down to 75s. I would like to be a buyer down at 75s, spot, not trading, and you know, potentially DCA all the way down to sort of this 50k area. I think that's a really nice area, and it's basically a fire sale if we ever got down to 33k. Here's dreaming, right? Here's to hoping. Yeah, yen is killing you. Yeah, I mean, to be fair, yen's been pretty slow all day. It's not really moved too much. I was in a euro yen position and hit stop in the past hour. My entry was, I believe it was a breakout of that high. So I got tagged in on this candle a couple of days ago, and I've just held this position. And every time it's come back to my entry, it's just sold straight back off again. And then, yeah, finally hit stop in the past hour. I'm only in one more position, which is dollar CAD, and, you know, should have hit stop a couple, literally like 2 hours ago. It went straight to my stop and, you know, somehow kept me in. So, you know, thank the stop loss overlords that I'm still in this trade, but I don't have much conviction. It's a mean reversion play. It's pretty much been invalidated by this, but hey, we're still in it. So let's ride it. Pretty poor day for me. Hit stop on silver this morning. I mean, that looks quite tight. I don't know if there was because it was overnight. Maybe spread blew out or something. I'm not really sure. Although I would have hit stop anyway, it is what it is. And then that's my euro yen trade. So you can see pretty much just sold off every time we got back to my entry. And then, like I say, the only thing that I'm in now is dollar CAD, and yeah, after a pretty strong hour, it looks like it doesn't want to continue. It'd be nice if we can. I'm only looking for like 50 pips on that dollar CAD. It'll be nice if that can reverse and go to target, because then I'll be scratched for the day, which is always a winner on a day like this where, you know, the market just does a complete one-way move like this. Yeah, I mean, SPX, NASDAQ, like that's brutal, man. How much is that? Oh, it's not too bad. I think it looks worse than it is. I think it looks worse because we've been in a market recently that just grinds. Like, it's just kind of like grinding to the upside. So that when you have this enhanced volatility, like, it feels faster than it actually is, or it feels like a bigger move than it is. But it's not, you know, it's not too wild. I mean, Microsoft down 12.5% or almost, 12.5%. Like, Meta holding strong at +7, like, gapped up. Look on the day, gapped up, still, you know, sold off since the open. But yeah, I wouldn't like to be a buyer in this market. Pooja, about to lose my account that I tripled on my grid strategy today. My devil was EuroCAD. What happened? Any idea? Why such a big candle? I'm not 100% sure, to be honest. I read something about US policy, but I don't think there's anything specific. I think no idea really. I don't keep in the know too much about that kind of thing until after the fact. So I'll probably do some reading tonight, see if there's anything that causes. But I think when we look at metals, this was kind of always going to happen eventually, whether it's long term and, you know, this ends the move up. Who knows? Probably not. It'll probably just be like another one of these days, and then tomorrow will continue higher. Who knows? The thing is with what you're doing, if you're grid trading, that's always going to work until it doesn't work. So just be very, very careful of that. I mean, EuroCAD's in quite a small range, really. Unemployment claims were against dollar. Not sure why this happened. There's not always a correlation between news releases and kind of the cause and effect relationship with that and pricing of assets. Like, a lot of things like that are already priced into the market. You know, people. The bigger guys, like the institutional traders and you know, the people who do this at a high level, they don't wait for news releases to react to the market. They've already reacted a month prior. You know, they're making their predictions and they're trading their predictions, and then generally if the news comes out, that might be a way for them to exit the market instead of getting into the market. You know, if I predict that jobless claims or unemployment claims are going up, and therefore I enter a position based off that, and then when the news drops and I'm wrong, you know, maybe I'll look to exit my position. But don't always think there needs to be a correlation between the physical number on release and kind of what happens, you know, thereafter. But yeah, grid trading, listen, like I say, it works until it doesn't work. You just got to be super, super careful with that sort of stuff. I would heavily back test that over a long period of time if you can, because if you said you're about to lose your account that you tripled on your grid strategy on a move like this, I'd be quite worried about the parameters that you have set on a grid strategy, purely because this isn't really too much of a big move. So yeah, just be careful on that. Just be careful. But yeah, things looking red across the board. VIX is up almost 19.5%. Sorry, no, it is up 19%. I was reading 19.46. Yeah, it's up 19% on the VIX today on the day. Pretty beefy increase in volatility. I'm just interested in crypto here because I think this is going to be, personally, I think it's going to be a one-way move down here, back down to these lows. 75K, I mean, how much is that from the highs? 40% down. So essentially, if we get down to 75K, you're getting it as 40% discount from the highs. Like, not bad. I mean, where's let's take a simple moving average on the daily. I just want one moving average. Simple go 100 day. Okay, actually, the 100 day moving average is higher than when we are now, which is interesting. Let's check out the 200 and 500 as well. 200 day moving average also higher, which is interesting, and then 500 day. Okay, that's quite interesting for me. So like, usually what I'll do is I'll use something like these moving averages when looking at an asset like crypto, metals, indices. I don't use this to trade off of, but I use it to get kind of a fair value of price, you know, compared to the average over the past X amount of periods. And actually, when I'm looking at the 100, 200, and 500, Bitcoin's actually lower than all three of those averages. So if we do continue this, you know, down to 75K, for me, that actually might be a pretty decent buy. You know, all-time highs back up here. Who knows? Maybe it's just you play the range. I'm just talking spot here as well. I'm not talking a specific trade. I'm talking like something I would like to do for, you know, a 6 to 12 month period. Is like maybe enter first here, get some more there, and then you know, if we continue to go lower, just buy back in a little bit lower and then hold it for again a couple of years. Yeah, Microsoft down 12%. It's wild. 12.5% on the day. Wild. Straight back below that 500 period moving average I was just talking about as well. See, I guess like, I mean, I guess you could trade something off of the 500 period moving average. It's usually where you kind of see it reconsolidate to. Like you see, it's kind of like even here, it's kind of like, okay, you're kind of getting a fair value for this asset at the time. That's the way I see it. I mean, like I said, I don't really take any day trades off of that. It's more for like my longer term positions. It's just understanding where we are relative to those 200. Yeah, under the 200, under the 100. Yeah, interesting. Massive gap. I wonder what's caused that. So soft. Don't tempt me with a good time. Yeah, it's all just people talking about it. There's no like there's no real answer here, I guess. Let's check. Yeah, interesting. I mean, I didn't expect this today. I'll be completely honest. I was expecting something similar, but I wasn't expecting it to be this violent. Really, looks like metals are having a little bit of a pullback now over this next hour. My dollar CAD again is grinding against me. So yeah, a bit of a crazy one. But I always think if you walk away from a day like today up, or if you walk away from a day like today at scratch, you've kind of, you know, you've done well. You've at least avoided being chopped about. You know, when there's a lot of people who will be in a really bad state today. You know, they'll have done stupid things, they'll have taken stupid trades, they'll have over risked. You know, and maybe not just today in terms of they've over risked today, but for example, like metals or crypto or, you know, a specific stock. When your friend down the pub is telling you to buy something, generally that's kind of your reason to get out and walk away. So I can only imagine the amount of people who, you know, were buying Bitcoin up at 120K because their friend told them that they've made, you know, over the past year they've doubled their money. You know, metals. People were lining up in the streets to buy physical silver and physical gold, and you know, I don't know. Getting off on the tangent as per usual. What do you think about strategy with DXY and higher time frame with super trend or moving average pair, and USD CAD, USD JPY on the lower time frame with similar super trend or moving average pair? I mean, I don't know. Like I'm not. This is the thing, right? I'm not bothered about what strategy does if it performs well. If there's logic to it, and what I mean by that is if I understand why it's doing a certain thing, and it performs well, that's all I care about. I don't care what it does. You know, if you can get that to work, fantastic. But don't. I will test anything, and if it works, like, I'm happy. I guess that's the point to it. But without having a look at something specific like that, then I wouldn't know. I wouldn't be able to give you an answer on, you know, what I think about it or how I feel about it. I would say to test it for yourself, and, you know, if it's good, keep it to yourself. That's the main thing. I also managed to. I think I told everybody, or at least I tweeted about it and put it in the Discord. I won't go on to Darwinex because I'll have to log in. But we've set up the charity account for the charity Darwin. So for anybody who's missed it, who hasn't seen the post or hasn't come into the sessions recently, Blaine and I have set up a charity Darwin where we're implementing some strategies over the coming months. And the whole purpose of it is to build a track record, and any proceeds from that record, like with you guys, we're doing it live every Tuesday. We're going to build strategies in an educational and informative way, implement them, and any performance fees that are generated from that Darwin will go directly to charity. We've set it up so that it will go directly from Darwinex, so it will bypass myself, because of my worry was I was going to be liable for all the tax of the performance fees. And then donating all the proceeds to charity, so I'd be left out of pocket. So what we're going to do is donate them directly from charity. So that's all set up. We've got 2 strategies on there now. Blaine has one that we need to set up as well. So by next week, hopefully, we might have, you know, 4 or 5 strategies on there coming around for next Tuesday's session. So I'm really, really excited for that. I think it feels good to be, you know, doing something for actually for good, not just saying it's for good. Yeah, so I'm really excited for where we're going with that. Danny J, maybe not too surprising this drop across the board with what the S&P up at the 7,000 level and gold what appears to be an almost unsustainable rally. Yeah, absolutely, man. Absolutely. Like, it's not surprising that it's happened. I just always find it surprising the times, like, and how fast these things happen. You know, I think it's almost obvious that gold and silver, like metals, just look way too overextended. It's just, you know, we could have been saying that for the past year. It's just a matter of, okay, when are these people gonna stop buying, you know, and when are we finally going to see that retracement, which, you know, has been today so far. But I also wouldn't be surprised, like I say, if we just see something like this day down here, and we just then have another rally up. Nothing surprises me these days. Nothing surprises me. Danny Jane, at the end of the month, the S&P dips generally. Yeah, absolutely. I just realized, yeah, my Darwin's also done that. I was up 7%, and then down 3.1, or down to 3.1 at the minute. Yeah, I always get that at the end of the month. I always drop a little bit. It's a bit frustrating. Darwinex Algo Trader, please review my Darwin WIH. Just reached 430,000-ish total allocation. Fantastic work, man. Fantastic work. Let's take a look. WDIH. I wonder, have the rankings updated? No, it doesn't look like the rankings have updated. I'm curious to see the shake about in the DarwinIA rankings today, because as we know, when metals are rallying, the rankings are really difficult to climb up. But with today's pullback, I'm wondering, are the guys at the top going to have you know, they're going to have been shaken about? I don't know. JRMZ, this is like unprecedented. 30% in 1 month is just wild. I think he's a stocks trader. Yeah, I think they trade stocks, and it must have just kept gapping up and gapping up and gapping up. Yeah, next update is in 43 minutes. Okay, so we're gonna have to wait till the top of the hour to see the update. Okay, WDIH, great work, dude. How long is this? A year and a half, just under a year and a half. Ended last year 30.1%, super respectable. 6.31% this month. I mean, fantastic. $412,000, banging 100K in DarwinIA allocations. I mean, dude, just phenomenal. Keep this up, right? Like, this curve is fantastic. Like, be super proud of what you've done so far. 8.12 8.21% max drawdown over the past year and a half, solid, with a 40.92% return. Absolutely fantastic. What is it you trade out of interest? Commodities and FX. Okay, so pretty much just commodities, right? 125 trades on FX, 2,000 on commodities. That's just pure gold. Pure gold, and then you have some. I'm presuming that you're gold only now. Perhaps you was testing out some FX at the beginning, and then it just turns to gold, maybe. Yeah. Yeah, that's what I expected. So it looks like you've just gone laser focused on gold. Yeah, which is great, because this kind of like, it helps me because knowing that you don't trade FX anymore, like we don't really need to cover this. But 66% win rate is fantastic. What's your average risk to reward? 0.85. So what's it? 0.85 is your average risk to reward. So just under 1R with a 66% win rate. Yeah, I mean, over a long period, I'm trying to think what's the, so 1-to-1 at 50% is break even. I'm trying to remember how much, I can't remember. All we know is that it's profitable, clearly. Sessions, we won't look at that. Days of the week, interesting, like there's not too much disparity between your return per day of the week, which I usually find with algo traders anyway. You have a couple of weaker days. So what day is this? Your Wednesday's slightly weaker comparative to the other days. Like it doesn't look like you have much activity on a Wednesday. I don't know if that's the type of strategies that you have. For example, if you're having breakout systems, maybe they're more active earlier or later on in the week. Whereas a mean reversion system would be more likely to be a bit more active middle of the week. Something to be aware of, like these kinds of things, they're quite easy for algo traders actually to go away and test, because you can run what if analysis on your systems, and remove days and see if your performance would be better. I've always said on these sessions, right, your goal as a trader should be to do less work with more reward, right? Sounds simple, sounds easy. Of course it's not, but it's about finding low-hanging fruits, where things that you may not have realized in the past that are hindering your performance, or things that you could potentially do, to kind of double down on what you already do well. So we already know that your strong point is trading gold, right? You've got a 66% win rate with an average payoff ratio of 0.85. We know you're profitable on gold. Now, we don't need to kind of take anything away from that as kind of its own variable. So how do we double down on that? Well, we can start taking a look at the other variables. You don't have anything here that I would be like, I'll just stop trading on that day. Like I think it would be silly to do that, especially when you're positive on all days, and it's not like you're expending mental capital by pressing the button and going through the decision making of actually deciding to place a trade. It's all done automatically for you. But I would monitor your performance on a Wednesday over the coming years, because if you find that it's kind of flatline, I try and understand why. Perhaps it's just one of those things, but perhaps it's also not. Maybe there's something deeper to it, right, that you can explore. Is it a specific asset that you're trying to trade that underperforms on a Wednesday for whatever reason? So I always talk about with this, I did a lot of data analysis actually before I become an algorithmic trader. And I basically went through years and years, and I did all this manually. I went through years and years and years worth of candlestick data, mapped it out week by week, and what day did the high or low of the week print? Okay, at what day did the asset print its highest price and its lowest price point? And I found that Wednesday, without question, was the highest chance, specifically for gold. Actually, I did it for a couple of yen pairs, gold and euro dollar, and Wednesday for gold was like the highest chance of it having that reversal and printing a high or printing a low. So when I look at that, I'm going, okay, well, breakout strategies are likely less flipping hell, I can't even talk. They're less likely to work on a Wednesday, because historically there's a 60% chance, let's say, I can't remember the exact number off the top of my head, but let's just say there's a 60% chance that Wednesday will print a high or low of the week. So if you're trying to trade a breakout system on a day where you know it's statistically unlikely to continue, you're kind of playing your bad hand, you know, and still allocating the same amount of risk. So it's a topic that we haven't spoke about in a while, actually, and it's kind of like dynamic risk, and not necessarily grading your trades, but understanding the expected value and the probability for each variable and going, well, on a Wednesday, my system, because of these variables, has a lower expected value. And because I know it has a lower expected value by whatever measurement you use, I'm going to allocate less capital to that position. And you can do this across, you know, it's easy for an algorithmic trader to do this, but it's also easy for a discretionary trader to do this. It might just be a bit more manual collection, you know, to get all the data, to get your understanding of kind of these variables. But I would go, if I know that there's less chance that it's going to break out today, do I want to be risking the same amount of capital as I would on a Monday when I know that the chance of Monday's high and low, you know, being broken out of is exponentially higher? Probably not. And I always use the example of, you know, a professional poker player never bets the same amount of money on two different hands, right? If you have, I mean, I'm not a big poker player, so I don't know all the names for each hand, but if you have a winning hand that you know is like a super, super high probability that you're going to win that round, you're obviously going to bet more chips, right? Whereas if you've got, I don't know, 3 of hearts, 4 of clubs, and you know, nothing else that's going to give you any chance of winning that hand, unless you're nuts and unless you have a really good bluff, you're not going to bet the same as you would if you had a flush or what have you. You might even fold and just give your chips in, right? That's kind of like the mentality is you don't necessarily always play your bad hands, or you risk less on your bad hands. But traders seem to have this ideology of you have to bet the same amount for each position. And I kind of understand it to a degree, but when you start digging into your expected value per position and you start exploring all of the individual variables in their own accord, it kind of doesn't make sense to risk the same on each individual trade. So anyway, all of that to say is, like, I would keep monitoring your Wednesday's performance, compare it to Monday, and understand, is it a strategy perspective? Like, is it a strategy thing? Is the strategies that you trade, are they more likely to perform well on a Monday because of the structure of the systems? Or is it just chance? You might do a back test of these systems for the past 10 years, 20 years, however long, and go, well, actually, this year is the only year that Monday's been, you know, a positive day of the week. And actually Wednesday is usually the highest returning day. And in which case I'll zip it and shut up, you know. But only you will know that, right? And I would just monitor this going forward, compare it to kind of previous year's data, because also you can check if something's not performing live the way that it has in its back test. You'll notice by checking out various data points like this. Puja, I wasn't able to recognize you. I went back and checked on channel. Hair looks so good, man. You look 10 years younger at least. Are you on about when I used to have my hair up? I was tempted to wear a cap today because I'm looking a little bit flat. I've got a haircut booked in next week. In fact, I'm gonna do that. I'm gonna wear my cap. I feel a bit like a scruff at the minute. I definitely need a haircut. There we go. I'm in my Darwinex gear today. I was supposed to be recording an interview with somebody today, but we had to cancel, so we're doing it next week. Hence why I'm representing. You can't see because my name thing here, but representing the old Darwinex. If you have time, can you look over Darwin WDEW primarily to discuss the deleverage a bit more in depth and the exposure element as per DM earlier? Tar. Yeah, absolutely. We'll just take a quick look at WDIH's strategy analysis, and then we'll jump over to that. Okay, so 2,200 trades. Fantastic sample size here. 72.5% long exposure. I'm presuming that's because you're trading gold, and gold has been, you know, rallying over the past couple of years. 66% win rate with average payoff ratio of 0.85. That's interesting. So, I mean, considering all these points, if you have a 72.55% long exposure, I mean, I'm probably being really, really dumb here. But could you find a way to hold these trades for longer because you're trading an asset that naturally or historically just increases in value? You know, not necessarily saying you have to hold every trade to the moon, but to try and increase your payoff ratio slightly. I mean, if you can get that to 1 and maintain the same win rate or a similar win rate, like, dude, you'd be absolutely caking it. I mean, you already are, but like, I mean, you beat me in the leaderboard this month anyway. Using 3 breakout systems and 1 hybrid breakout and mean reversion, added 2 algos recently. Okay, mean reversion. So the mean reversion system probably skews your metrics right. That's one thing I've noticed is because I trade so many, added an algo holds it for weeks. I've noticed when I'm looking at mine, so for example, my open strategy is really, really poor, as you can see here. And that's mainly because of my breakout systems. So it's like you can't take every statistic at face value. So I'm glad you said that, because the mean reversion strategy would probably skew the statistics here, and also your holding time, because you might have some strategies where you're holding a breakout for 20 minutes, a couple of hours, whatnot, and then you might have a mean reversion system that you're sat in for a couple of days, and you might have a breakout system that's holding it for weeks, like you say. So it's hard in isolation. You kind of have to break it down per strategy. So I hope you're using magic numbers and then doing exports or analysis on you know, MyFXBook or FX Blue, and breaking it down by magic numbers. So like you can see on here, all of my systems have different magic numbers. So at least I can go away and kind of export one set of magic numbers and see how that specific system has been performing over a period of time. Because sometimes it is like, if you're trading multiple things, it is hard to gauge where your weakness is and where your strong suit is if you bunged all of the data together, because the weaknesses of the mean reversion system might get masked by the benefits of the breakout system, etc., and so on and so forth. It looks like as well, just looking at that USD CAD, it looks like everything's doing a full reversal. It's wild. Maybe in the next hour we'll see a huge sell-off again. I don't know, but it seems like these gold and silver, every time it's been selling off. I mean, we said this the other day, I think, when me and Blame was on stream. Every time it's selling off, it just keeps getting aggressively bought back up. I don't know if this is aggression or if it's like, I mean, who's still holding a short after a 10% dump? Like, you know, most people probably closed the positions and closed up for the week. Who knows? But yeah, it just seems, I don't know. Okay, loss aversion. Okay, again, this is such a difficult one to judge, because if you're running multiple strategies, it's hard to look and say, well, you should have an average of XYZ, because there is going to be a difference. And again, mine is a perfect example of this. You know, I'm running 29 strategies on my portfolio, so of course each system has its own kind of average. So you can't look at it as a group and be like, well, you should probably bring your stops up on all these trades, because though that strategy specifically may have wider stops, and therefore your maximum adverse excursion is going to be slightly larger than you know, another scalping system that may have like a 5 pip stop, for example. So it's always harder to measure these metrics for a portfolio when there's more than one strategy. Wish could backtest all my third-party algos together. I hope gold hits 6K soon. I mean, you can and you can't. You'd have to backtest them separately, but then you could load them all into Quant Analyzer. So, for example, you can see I've got 2 strategies in here now. I presume you use Quant Analyzer, but maybe you don't. If you don't, you definitely should. So these are the individual strategies with the individual backtests. Okay, so I can load them up and they're different. So we have strategy 1, strategy 2. But if I want to see them together, I can combine them into a portfolio. So I'll just click CADGen portfolio. And then it will load it all together. So you can see sub-equities. So you can see both of the strategies together, and then you can see them combined. So as the portfolio. Check the portfolio correlation, so you can see how correlated they are on a day, hour, week, and month in terms of how many trades they open, the P&L, etc. Yeah, so there is ways to do it, but you can't just strategy quant. Yeah, so download Quant Analyzer, stick all your strategy reports into QA, and you'll be able to see it like this. As in, you'll be able to measure all the correlation between each strategy. You'll be able to see the final result for the portfolio sort of thing. If I delete these, I'll delete that as well. So if I go, this is LVFZ. This is my secondary portfolio. I think there's more. There's like 35 strategies, 37 strategies in LVFZ. So I'm just showing you so that you can see what I do for this. Because you back test them all separately, right? But then you just combine the data in Quant Analyzer. God, there's so many. I didn't realize I had 37. 37 sounds like a lot, is it? Is that right? 35. I must have a couple of rogue reports of strategies that I've actually removed, but still in that folder. Yeah, piercing line, that's gone. That screwed me over the other day. So we can get rid of that. What else is in here that shouldn't be? I don't know which one's in there that shouldn't be in there, but USD JPY, count the channel, there's only one, but then there's two here. There's actually three. KC, yeah, count the channel. Is there a retired? Filter. I'm so confused. Oh, doesn't really matter. So now that I've got all my reports, this is for my Darwin LVFZ. I'll just click create portfolio, LVFZ, load this up. I'm going to go to settings. And because it's added $100,000 for each strategy, because that's what the individual tests were based on, I'm going to change it all to $100,000 because that's what I would run the portfolio on. Recompute stats. Oh no, the results are in percentage. And then if we go to overview, you can see my final testing is over an 8-year period, 149% return, 1.67% drawdown with the equity chart. Now, you can just click sub equities only, and you see all the individual strategies. You can go portfolio correlation, compute them all. In fact, let's just do it by, it's still loading. This is free, by the way. There is a paid version of Quant Analyzer. I don't have the paid version, but these are all parts of the free features of. So you can measure the portfolio correlation. So you can see I do have 2 Aussie yen strategies that are correlated. So my Ichimoku Boro and my Ichimoku Keijin are correlated quite highly, but I'm okay with that because I run them both at quite low risk anyway. You can do things like your what if analysis. So we could go, let's look at an individual strategy. Let's just take a look at this one, for example. So we can go, let's just say we want to stop trading. We only want it to trade from 6 till 12. So we go, okay, what if? So what if we just select the hours 6 till 12? Oh, create what if, and then you'll see it'll create me a new report, analyze. You see it's removed all of the trades outside of that time. So there's a lot of things that you can do in Quant Analyzer that goes into like back testing all your third-party systems. I mean, I appreciate we're getting kind of away from what the purpose of the session is, but I think it's important. Obviously, you I mean, it wasn't even a question. It was more of a statement. You wish you could do it, but you can not necessarily back test them all together. Maybe there's something that you can do that with. I don't know. That's the way I do it. Okay, value at risk is pretty unstable. I can't lie, but this is over a a year and a half, I would just try and say keep your VAR as stable as possible, and I wouldn't let it go too much higher. I don't know what your average deleverage is per position. I wouldn't be able to see. It's only something that you would be able to see. But just to keep kind of stability with the risk engine and your risk multiplier, try and keep this as kind of steady as you possibly can. So meaning you don't have an issue from an asset volatility perspective. You don't have an issue from trade duration really or frequency. It's more like the position size, I would say. Okay, there was an issue with them a year ago. Okay, that's fair. That's fair. Yeah, I think if this wasn't there, this section on the left, this would probably look a lot more steady. Okay, cool. Who was it? Who WDEW? Probably discuss the deleverage bit a bit more in depth and the exposure element. Okay, so let me load up Discord. You asked. God, so tired. I don't know what's wrong with me today. Just want to make sure. Okay, so you asked. Recently, part of my trade exposure closed on a GA position. You was in yesterday and today. I had 2.3 lots, with an overall risk of approximately $300 to $400 on a signal account for each entry if trades were to get stopped. Okay, so it doesn't. The risk engine doesn't take into account where your stop is or where your target is. So kind of the overall risk per position from your perspective isn't quite what the risk engine will look at. It looks at your overall value at risk of the position, not taking into account your stops and targets. Bit confused. I only had multiple trades running before. Okay, so like I sent to you, the risk engine has kind of a max deleverage allowance per position, and a position is a combined position of trades. So if you have 2 trades or 3 trades or 4 trades, all of those individual trades combine into a single position. The risk engine will measure your value at risk of that position. If your deleverage exceeds a certain threshold within that certain time period, then it will shave some of that position off. Now, the things that can affect that is the asset volatility. So if there's a big spike in the volatility of the assets, which recently wouldn't surprise me if there is at any point, that can cause the risk engine or the deleverage, to be increased. If you're taking more trades than usual, of course, that just builds up the overall position. So again, increasing the deleverage on that position. The longer you hold the trade as well, like I say, it measures your deleverage under certain time windows. And then your position sizing as well. So those are the factors that will affect your deleverage. I would take a look at your deleverage on your Signal account. So again, I can't see it, but if I load up mine, you'll see I'll be able to load up my Signal account. You see it has deleverage here. Now I risk very, very small size on my Signal account. So my deleverage has never exceeded, what's this here? Probably about 4. Okay, so I'm way under risk engine. I'm way under the limits or the deleverage limits anyway. So I would I mean, I don't know, maybe I would, but I doubt I would ever have any position shaved off. Yeah, so maximum deleverage of 16.25 for positions of less than 15 minutes, maximum deleverage of 13 for positions lasting 30 to 60 minutes, and maximum deleverage of 9.75 for positions that last more than 60 minutes. So if your deleverage went above here, that's presumably why the risk engine closed your position. Look at your deleverage on here and just see if it does exceed 9.75. That's probably why. But yeah, it doesn't take into account your stops or your targets or anything like that. It literally just looks at your open exposure on an asset at any given time. Oh man, I'm getting hammered today. Whew. Dollar CAD looks evil right now. Oh well, it is what it is. It is what it is. It's a shame that kind of the last day of the month and then it's starting to lose 1% or 1.5%. Sent you a screenshot we can see on deleverage. Okay, let me check. Okay, so your deleverage looks really, really low anyway. Yeah, your deleverage looks really low anyway. Let me speak to some of the guys on product, and they might be able to look at your specific case and give me the actual reason why. Yeah, I mean, there might be more reasons in terms of like why the risk engine would step in, but I think it's most of the time it's around the deleverage of any individual trade anyway, or in any individual position. But just send me another DM. I'm going to close it now so it's unread. Just ping me another DM and I'll speak to someone from product and just say, can you take a look at this and kind of explain why this happened so that the trader knows, moving forward, this is sort of what can happen in this specific situation. Because yeah, your deleverage is super low. Darwinex Algo Trader, when do you think my Darwin could get another 300,000 investor funding? I mean, completely depends. Completely depends on performance. Completely depends on right time, right person. Like, yeah, could happen tomorrow. Could happen in a month. Might take a year. Just don't know. There's no kind of rhyme or reason to it, really. Some traders scale very quickly. Some take a little bit longer. Just be patient with it. Don't put too much pressure on the time. This is super interesting. So everything's down, even the inversely correlated pairs are down. So the dollar's down 0.3% against the yen and against Canadian dollar, but it's up against euro and against pound. Like, there's just no kind of rhyme or reason to this right now. Yeah, dollar CAD, sorry, is pulling back hard. I'll probably get stopped on that as well, and it'll just turn out to be probably the worst day that I've had at Darwinex, I think. Probably maybe not the worst day, but one of the worst. Got the initial funding from getting into index. Like, fantastic. That's a nice chunk to get you started as well. The index is probably going to be your first big investor, or at least decent size investor. I think, my biggest at the moment is about $90,000 from an individual investor. And that's quite large, I guess, but the index is usually the biggest investor on an individual Darwin because, you're looking probably somewhere between 200 to 500,000, maybe slightly more if your track record's really long and really good. So yeah, that's great. That's great to know. It's great to know. And just keep plugging away, man. Just keep doing the same things. Like, this is the thing, right? We can get lost in kind of wanting something to happen or having a target, but really your only job is to come in and do the right things every day, take the best trades, build the best strategies, do the right thing. The financial rewards will come, the capital will come from whoever it may be, and then the payments will come from that as well. So you just got to make sure you're doing the right things every day in, day out, every day. Oh God, I'm so tired. I don't even know why. My missus knows that I live stream at this time every day, and she's texting me saying urgent in capital letters. Like, she knows that I'm live. She knows that I'm live. Yeah, fun stuff. Anyway, guys, going to call it an end to the session here because I'm absolutely battered today, and it's been a super long day. So I want to thank you all for joining. I want to thank you guys, Darwinex Algo Trader and Danny J, for putting your hand up and having you taken a look at. Danny, I think you've just sent me another message, haven't you? Right. So yeah, I'll check with the product team tomorrow and I'll come back to you on that. And guys, have a fantastic rest of your week. Don't get caught up in this crappy price action. Don't revenge trade. Don't do anything stupid. Don't do anything I wouldn't do. Stay safe, and I will catch you on Tuesday for the strategy development session with Blaine. It'll be a big one. Gonna start showing you the charity Darwin, which will be super fun. So yeah, thank you all for tuning in. As always, thank you all for your comments. I hope you have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world, and I will see you in the next one, guys. Have a great weekend.